My dear students, welcome back to our channel. In this video, I will be explaining the Bcom 5th semester subject Cost Accounting as prescribed by Osmania University and other universities of Telangana. We will go through the important questions and answers one by one. Let's begin with a quick revision. Unit 5 first important short question is Features of contract costing. Contract costing is used in businesses like construction, road or bridge building, where each job or contract takes a long time to complete. It helps find the total cost and profit of each separate contract. Main features. 1. Big and long-term work. Each contract is usually large and takes many months or years. 2. Work at customer's site. The work is done at the contract site, not inside the contractor's factory. 3. Separate record. Each contract has its own cost record, showing materials, labor, and expenses. 4. Direct costs. Most costs like materials and labor are directly charged to that contract. 5. Progress payments. Contractor receives money in stages, work certified instead of one time. 6. Profit on incomplete work. Profit is calculated carefully based on the stage of completion. 7. Supervision. Each contract is supervised by a site engineer or manager. Example, building a school or highway, each project has its own contract and cost record. Easy tip. Each big site is equal to one contract is equal to one cost record. Next important short question is 2. Distinguish between job costing and contract costing. Difference between job costing and contract costing. Simple explanation. Both job costing and contract costing find the cost of specific work, but they differ mainly in size, time, and place of work. Basis job costing, contract costing. 1. Nature of work, small and short-term jobs. Large-scale and long-term projects. 2. Place of work, work done inside the factory or workshop. Work done at the customer's site. 3. Duration, usually short. Usually long, months or years. 4. Cost record, separate record for each job. Separate record for each contract. 5. Supervision, less supervision required. Continuous site supervision needed. 6. Example, making furniture for a customer. Building a bridge, road, or building. Easy tip to remember. Job is equal to small and quick, done inside. Contract is equal to big and long, done outside. Both aim to calculate accurate cost and profit, but contract costing is used for large projects while job costing suits small orders. Next important short question is 3. Calculate cost of abnormal loss from the figures given below. Normal output 18,000 units. Actual output 17,000 units. Normal cost of normal output 54,000 rupees. Given data. Normal output is equal to 18,000 units. Actual output is equal to 17,000 units. Normal cost of normal output is equal to 54,000 rupees. We have to find cost of abnormal loss. Step 1. Find normal cost per unit. Normal cost per unit is equal to normal cost of normal output divided by normal output is equal to 54,000 rupees divided by 18,000 units is equal to 3 rupee per unit. This means each normal unit costs 3 rupee to produce. Step 2. Find abnormal loss units. Normal output is equal to 18,000. Actual output is equal to 17,000. So, abnormal loss is equal to 18,000 to 17,000 is equal to 1,000 units. These are the extra units lost beyond normal level. Step 3. Calculate cost of abnormal loss. Abnormal loss is equal to units times cost per unit is equal to 1000 times 3 rupees is equal to 3000 rupees. Final answer. Cost of abnormal loss is equal to 3000 rupees. Memory tip. Find cost per unit. Find lost units multiply is equal to abnormal loss cost. Simple formula. Abnormal loss is equal to normal cost divided by normal output times abnormal loss units. Next important short question is: 4 following amounts have been spent on a contract still incomplete on 31st March 1997. Question data. Materials is equal to 80,000 rupees. Wages is equal to 70,000 rupees. Direct charges is equal to 50,000 rupees. Cash received is equal to 2 lakhs rupees, which is 80% of work certified. Uncertified work is equal to 10,000 rupees. Total contract price is equal to 4 lakhs rupees. We have to find profit to be credited to profit and loss AC. Step 1. Find total cost of work to date. All expenses so far is equal to materials plus wages plus direct charges is equal to 80,000 rupees plus 70,000 rupees plus 50,000 rupees is equal to 2 lakhs rupees. Tip: always total up all direct costs first. Step 2. Find work certified. Cash received is equal to 80% of work certified. Work certified is equal to 200,000.8 is equal to 2,50,000. Tip: divide by 0.8 to get full value before deduction. Step 3. Find total work done. Work done is equal to work certified plus uncertified work is equal to 2,50,000 rupees plus 10,000 rupees is equal to 2,60,000 rupees. Step 4. Calculate notional profit. Notional profit is equal to total work done, total cost to date is equal to 2,60,000 rupees to 2 lakhs rupees is equal to 60,000 rupees. Tip: value of work done minus total cost is equal to notional profit. Step 5. Transfer profit to P&L account. Since the work is less than 2/3 complete, we use this formula. Profit to P&L is equal to notional profit times cash received work certified is equal to 60,000 times 200,000,002 50,000 is equal to 60,000 times 0.8 is equal to 48,000. Final answer. Profit to be credited to P&L account is equal to 48,000 rupees. Memory tip. Add all cost, find work certified, subtract apply formula. Or simply remember, CWCUP is equal to cost work certified uncertified profit. That's the easy Abed style way to remember it. Next important short question is: 5 from the following figures, compute abnormal gain. Given data. Normal loss is equal to 100 units. Normal output is equal to 10,000 units. Actual output is equal to 11,000 units. Normal cost of normal output is equal to 20,000 rupees. We have to find cost of abnormal gain. Step 1. Find normal cost per unit. Normal cost per unit is equal to normal cost of normal output is equal to 20,000 rupees divided by 10,000 units is equal to 2 rupee per unit. Tip: this gives the cost of making one normal unit. Step 2. Find abnormal gain units. Actual output is equal to 11,000. Normal output is equal to 10,000. So, abnormal gain is equal to 11,000 to 10,000 is equal to 1,000 units. Meaning, we produced 1000 extra units than expected. That's our gain. Step 3. Calculate value of abnormal gain. Abnormal gain is equal to units times cost per unit. Is equal to 1000 times 2 rupees is equal to 2000 rupees. Final answer. Abnormal gain is equal to 2000 rupees. Memory trick. Find per unit cost, find extra units, multiply is equal to abnormal gain. Or simply remember, A is equal to actual normal times cost per unit. Easy line to recall. When output is more than normal, profit is formal. Next unit we. Long questions. First important problem is prepare contract account from the information given below. Given data. Particulars 2019, 2020. Materials sent 1,50,000 42,000. Wages paid 1,15,000 52,500. Outstanding expenses 17,500 7,700. Materials at end 6,500 3,500. Cash received 3 lakhs 5 lakhs. Work certified 75% 100%. Goal. Prepare the contract account and understand profit on completion in simple steps. Step 1. Find total cost of contract. Total cost includes all direct expenses. Total cost is equal to materials plus wages plus outstanding expenses, closing materials. For 2019 is equal to 1,50,000 plus 1,15,000 plus 17,500, 6,500 is equal to 2,76,000 rupees. For 2020 is equal to 42,000 plus 52,500 plus 7,700, 3,500 is equal to 98,700 rupees. Step 2. Total cost till completion is equal to 2019 plus 2020 is equal to 2,76,000 rupees plus 98,700 rupees is equal to 3,74,700 rupees. Step 3. Work certified. In 2019 75% complete. In 2020 100% complete, means contract finished. So, the contract is completed in 2020. Step 4. Find total value of contract. From cash received data. In 2019, 75% work done cash 3 lakhs rupees. So full contract value is equal to 3 lakhs rupees divided by 0.75 is equal to 4 lakhs rupees. Step 5. Find profit on completion. When contract is completed, total profit is equal to contract value total cost. Profit is equal to 4 lakhs to 3 lakhs 74,700 is equal to 25,300 rupees. Final answer. Total profit on contract is equal to 25,300 rupees. Memory tip. 1. Add all costs. 2. Subtract closing materials. 3. Find total cost. 4. Compare with contract value. 5. Balance is equal to profit. Or simply remember, M plus W plus E, C is equal to cost, contract, cost is equal to profit. That's the Abedser easy method. Next important problem is 2. The following particulars related to a contract undertaken by Raj engineers. You are required to prepare contract account. Given data. Particulars amount. Materials sent to site 85,349. Labor 74,375. Plant installed 15,000. Direct expenditure 3,167. Establishment charges 4,126. Materials returned 549. Work certified 1,95,000. Cost of work uncertified 4,500. Materials in hand 1,883. Wages accrued 2,400. Direct expenditure accrued 240. Value of plant end 11,000. Contract price to lakhs 50,000. Cash received 1,80,000. Goal: prepare contract account and find profit to be taken to P&L in simple steps. Step 1. Calculate total cost of contract. Total cost includes materials used, labor including accrued, direct and establishment expenses including accrued, less materials returned and in hand, less depreciation on plant. Let's do it. 1. Materials used is equal to 85,349 to 549. 1,883 is equal to 82,917. To labor is equal to 74,375 plus 2,400 equals 76,775. 3. Direct expenses is equal to 3,167 plus 240 equals 3,407. 4. Establishment charges is equal to 4,126. 5. Plant depreciation is equal to 15,000 to 11,000 is equal to 4,000. Step 2. Add them up to get total cost. Total cost is equal to 82,917 plus 76,775 plus 3,407 plus 4,126 plus 4,000 is equal to 1,71,225 rupees. Step 3. Determine value of work done. Work certified 1,95,000 rupees. Work uncertified 4,500 rupees. Total work done is equal to 1,99,500 rupees. Step 4. Find notional profit. Notional profit is equal to value of work done total cost is equal to 1,99,500 to 1,71,225 is equal to 28,275 rupees. Step 5. Profit to be taken to P&L. Since work is partially completed, apply Abed-Sir's rule. When work certified is between 50% 90%. Profit to P&L is equal to notional profit times cash received work certified times 2/3. So, is equal to 28,275 times 1,80,000 / 1,95,000 times 2/3. 17,400 rupees, approx, transferred to P&L. The balance profit stays as reserve in contract account. Final summary. Particular amount. Total cost of contract 1,71,225. Total work done 1,99,500. Notional profit 28,275. Profit to P&L 17,400. Profit in reserve 10,875. Electric light bulb memory tip, Abed-Sir style. CMLE, find cost. Then compare with W, work done. Work certified decides how much profit you can take. That's how you solve any contract account question, step by step, clean and easy. Next important problem is 3. A firm of building contractors began to trade on 1st April 2017. The following was the expenditure and contract price is 3 lakhs rupees. Prepare a contract account and balance form above particulars. Given data. Particulars amount. Materials issued 51,000. Plant used 15,000. Wages 81,000. Other expenses 5,000. Contract price 3 lakhs. Cash received 1,28,000, 80% of work certified. Materials lost 2,500. Plant lost 3,000. Plant returned 2,000. Materials in hand 2,300. Work uncertified 1,000. Depreciation on plant 15%. Profit to P&L 2/3 of profit received. Goal. Prepare contract account and find profit to P&L, step-by-step explanation. Step 1. Find work certified. We know cash received is equal to 80% of work certified. So, 1. 28,000 is equal to 0.8 times work certified. Work certified is equal to 1. 28,000 divided by 0.8 is equal to 1,60,000. Step 2. Calculate total cost of contract. We include all direct costs and adjustments. 1. Materials used is equal to 51,000 to 2,300, in hand 2,500, lost is equal to 46,200 rupees. 2. Wages 81,000. 3. Other expenses 5,000. 4. Plant depreciation. Total plant is equal to 15,000. Returned is equal to 2,000. Lost is equal to 3,000. Remaining is equal to 15,000 to 2,000, 3,000 is equal to 10,000. Depreciation at 15% is equal to 1,500. Total plant cost to charge is equal to 15,000 to 2,000, 11,000, value after DA is equal to 2,000 plus 3,000 plus 1,500 is equal to 6,500 rupees. So, total plant charge is equal to 6,500 rupees. Step 3. Add all costs. Particular amount. Materials used 46,200. Wages 81,000. Other expenses 5,000. Plant, loss plus depine. Plus returned, 6,500. Total cost 1,38,700. Step 4. Add work uncertified. Total work done is equal to work certified plus work uncertified. Is equal to 1,60,000 plus 1,000 is equal to 1,61,000 rupees. Step 5. Notional profit. Notional profit is equal to work done total cost. Is equal to 161,000-1. 38,700 is equal to 22,300. Step 6. Find profit to P&L. Work certified is equal to 1,60,000 rupees, between 50-90% complete. So, formula. Profit to P&L is equal to notional profit times cash received, work certified, times 2/3. 11,900. Final answer. Particular amount. Total cost of contract 1,38,700 rupees. Work certified 1,60,000 rupees. Work uncertified 1,000 rupees. Notional profit 22,300 rupees. Profit to P&L, 2/3 rule, 11,900 rupees. Profit in reserve, balance, 10,400 rupees. Abed sir's memory trick. Find cost, add work, compare, apply 2/3 rule. When work certified is 50-90%, take 2/3 of profit received. Next important problem is, for a product is obtained after passing it through 3 processes. The following information is collected for January 2020. Prepare the process account indicating normal loss, abnormal loss and abnormal gain. Given data. Process direct materials direct wages output, units, normal loss percent scrap value unit. I 10,400 8,950 10% 8. To 7,920 12,840 15% 16. 3 11,848 16,755% 20. Units introduced in process I is equal to 1000 at 12 rupees. Each material cost is equal to 1000 times 12 is equal to 12,000 rupees. Production overhead is equal to 36,000 rupees. We will allocate proportionally to each process. No beginning ending WIP. Step 1. Calculate total cost for process I. Direct costs. Materials 12,000 plus 10,400 is equal to 22,400 rupees. Wages 8,000 rupees. Allocate overhead. Total overhead 36,000 rupees. Assume equally divided among 3 processes, 12,000 rupee per process. Total cost process I is equal to 22,400 plus 8, 000 plus 12, 000 is equal to 42,400. Step 2. Identify normal loss in process I. Normal loss is equal to 10% of input units is equal to 10% of 1000 is equal to 100 units. Scrap value is equal to 100 times 8 is equal to 800 rupees. Cost of good output 950 units. Cost per unit is equal to total cost. Scrap value of normal loss good output is equal to 42,400-800 950 43.68 unit. Step 3. Repeat for process 2. Input units is equal to 950. Output of process I. Normal loss is equal to 15% of 950 is equal to 142.5 143 units, rounding. Good output is equal to 950 to 143 is equal to 807 units given as 840 units, so there is an abnormal gain. Direct costs. Materials is equal to 7,920. Wages is equal to 12,000. Overhead is equal to 12,000. Total process to cost is equal to 7,920 plus 12,000 plus 12,000 is equal to 31,920 rupees. Cost per unit is equal to 31,920 divided by 840 38 rupees per unit. Abnormal gain is equal to actual output 840, expected output 950 to 143 is equal to 807, is equal to 33 units. Cost of abnormal gain is equal to 33 times 38 1,254 rupees credited to process account. Step 4. Process 3. Input units is equal to 840. Normal loss is equal to 5% of 840 is equal to 42 units. Good output is equal to 842 42 is equal to 798 units. Actual output is equal to 750. Abnormal loss is equal to 798 to 750 is equal to 48 units. Direct costs. Materials is equal to 11,848. Wages is equal to 16,000. Overhead is equal to 12,000. Total cost is equal to 11,848 plus 16,000 plus 12,000 is equal to 39,848 rupees. Scrap from normal loss is equal to 42 times 20 is equal to 840 rupees. Cost of good output is equal to 39,848 to 840 is equal to 39,008. Cost per unit is equal to 39,008 divided by 750 52 unit. Abnormal loss is equal to 48 times 50 to 2,496 rupees debited to process account. Step 5. Key points to remember. Normal loss, expected loss, scrap value reduces total cost. Abnormal loss, unexpected, fully charged to account. Abnormal gain, extra output, credited to account. Cost per unit formula. Cost unit is equal to total cost, scrap value of normal loss, good output. Next important problem is 5. A particular brand of phenyl passed through 3 important processes during the month of June 1983. Prepare the account in respect of each process showing its cost and cost of production of finished product per gross of bottles. Step 1. Gather given data. Total bottles is equal to 600 gross is equal to 600 times 144 equals 86,400 bottles. Processes and costs. Process materials, labor, direct expenses, cost of bottles, cost of corks. 8,000, 4,000, 1,800 nil. To 5,000, 2,500, 1,200, 2,300 nil. 3,000, 2,500 nil, 300. Indirect expenses is equal to 1,400. Byproduct of process 2 sold is equal to 200. Residue of process 3 sold is equal to 120. Step 2. Allocate indirect expenses. Total indirect expenses is equal to 1,400. Divide proportionally by direct cost of each process. Direct costs of each process, materials plus labor plus direct expenses plus bottle cork if any. Process direct cost. 8,000 plus 4,000 plus 1,800 equals 13,800. To 5,000 plus 2,500 plus 1,200 plus 2,300 equals 11,000. 3,000 plus 2,000 plus 500 plus 300 equals 5,800. Total direct costs is equal to 13,800 plus 11,000 plus 5,800 equals 30,600. Indirect expense per process. Process I is equal to 13,800 divided by 30,600 times 1,400 almost equals 631. Process 2 is equal to 11,000 divided by 30,600 times 1,400 almost equals 503. Process 3 is equal to 5,800 divided by 30,600 times 1,400 almost equals 266. Step 3. Total cost per process. Process direct cost, indirect expenses, total cost. 13,800, 631, 14,431. To 11,503, 11,503. 5,800, 266, 6,066. Step 4. Adjust for byproducts. Process to byproduct sold is equal to 200 reduce total cost of process 2. Adjusted cost 2 is equal to 11,503 to 200 is equal to 11,303. Process 3 residue sold is equal to 120 reduce total cost of process 3. Adjusted cost 3 is equal to 6,066 to 120 is equal to 5,946. Step 5. Total cost of finished product. Finished product is equal to process 3 output is equal to 86,400 bottles. Total cost of production is equal to cost of process I plus adjusted process 2 plus adjusted process 3. Total cost is equal to 14,431 plus 11,303 plus 5,946 equals 31,680. Cost per gross of bottles is equal to 31,680 divided by 652.8 rupees per gross. Step 6. Key points to remember. 1. Add materials plus labor plus direct expenses plus cost of bottle cork for each process. 2. Allocate indirect expenses proportionally. 3. Deduct sale value of byproducts residue from process cost. 4. Sum all adjusted costs total cost of finished product. 5. Divide by output to get cost per gross unit.